Hello, Jim here. Today I want to share with you a simple strategy that I like to use in around a $25,000 account. I'm able to earn pretty close to 1,000 on a monthly basis. I'm going to share with you the actual trades at the end, so be sure you stay until the very end. And I'm going to talk about how I set up the strategy, how do I pick the stocks, and pretty much how I manage the account. So stay tuned. I think it's going to be well worth your while. Okay, before I jump in, I do like to do a quick market update. It's been pretty much a crazy week. We've hit all-time highs again, and then we've kind of had negative days too. I think this is going to continue. We're going to have choppy markets, one day up and the next day down. I believe this is going to continue until Trump stops the crazy negotiation with the tariffs. I do think the tariffs potentially could be a good thing, but this going back and forth and changing it every day is pretty rough on the markets and the companies that are trying to make decisions. I also think the Fed should be cutting rates, but I don't think they will. I'd prefer them to just do a quarter point, maybe in maybe next month, or maybe even this month if they change their mind. I just think the housing market is struggling a little bit, and the labor market is also struggling a bit. And I could see that, maybe inflation is inching up a bit, but I don't necessarily think it's a big issue right now. I think with gasoline coming down and a lot of the other stuff coming down, or some of the inflation may just be because of supply side stuff related to the tariffs. So I'd like to see a quarter point cut. Again, I don't think they're going to do it. I'd rather them do a little bit now than a lot later and just do it really slow and steady. But I also do like the higher rates with earning some pretty good interest in my different accounts. I just think we're going to have more of the same. The market's going to be kind of unpredictable. The days I think it might be down, it's up. The days I think it might be up, it's down. And I just see that happening probably like I said, for the next couple of months. Hopefully once we get through the tariffs, maybe in October or something, things will calm down. So at least that's what I'm hoping. A little bit of hopium. So let's just jump in. One thing that I talk about in all my videos is it's really important to pick good companies. I look at fundamentals. I like to look at return on equity, return on investment, return on assets. I also like to look at cash flow. Are they generating good cash flow? Do they have a lot of debt? I like to see a fairly low debt to equity. I really like to see companies that have no debt. And I believe those things are really important. Short term, the market's a voting machine. Long term, it's kind of a weighing machine. And we saw a lot of that in 20 and 21, more so in 21 when the market shot up. Some like Wayfair and even Zoom got to outrageously high prices, and everything fell back down literally a year later, a year and a half later. I believe Zoom dropped from like $300, $350 to like $40, $50. And Wayfair, I believe it still has not rebounded. Zoom has jumped up a little bit, but Wayfair was also $300, $400 back then, and it's dropped, I believe it's $20 or $30. So it's really important for any strategy to be picking the right stocks. If you do that right, you've won half the game. I also want to encourage people, try to keep things simple. I have a lot of members, and I've broken up my Discord into different areas. So I like to, if people are doing what I think are risky trades, I want them to put those trades in there. And I think it's just nature for a lot of people. They want to really make things complex. They want to do really advanced charting, and they just want to take more risk. To me, it's key to keep things simple. In the software industry, we call it KISS. Keep things simple, stupid. I might have said that quite a little bit wrong. If I did, I had a comment in there. It's not unusual for me to mispronounce something, but I think it's keep it simple, stupid is what I'm trying to say. And then also stick to safe type of positions. I don't really use margin. I don't do a ton of contracts. And that's partially why I like the wheel. If you have a smaller account, just a few trades every month can make a huge difference. And again, if you're picking in the right stocks and you're pretty okay with those stocks, if you get assigned or they get assigned to you, you're okay with it. Now, one thing with the wheel, the way I trade it, is I don't necessarily care if I own those stocks or not. So if the shares get assigned to me and then later get assigned away, I'm okay with that. At times I find it difficult. I want to roll up like a covered call on a stock that shot up. Like right now I'm looking at that with Mara. Mara, I think, has jumped into, I think it's might be as high as 20. I know SoFi, I think, hit 20 just in the last day or two. I think Mara is also like 17 or 18. I do like trading it, but at some point it does get too pricey. So it makes more sense to let those shares get called away and then kind of run it all over again. One thing with Mara and same thing with SoFi, what goes up comes down at some point, and I see that also happening. And then with the wheel, kind of what I was saying, it's like a rinse and a repeat. Again, it goes against the grain for me. I like to, my favorite trade is a vertical put credit spread. I go out 30, 60, 90 days, something along those lines. I like to get a strike that's, in my mind, 10, 15% below the current price. So the rinse and repeat is a little bit unusual for me because I typically want to own the stocks and keep them. And then if they're assigned to me, I want to sell covered calls on them and then keep upping them. So allowing the assignment is a little bit different. So if you're not familiar with what I'm talking about, so you sell a cash secured put and say it's a stock that's $20, you sell it maybe to 18 or 19, take a little bit more risk, bring in a lot of premium. If those shares get assigned to you, then you sell a covered call fairly close to the money. Again, if it was a $20 stock, well, maybe $21 or $22, again, bringing in a lot of premium. And if the stock moves and gets assigned away from you, again, those shares would be pulled away from you or assigned away from you, and then you would end up with the cash again, and you could start the process all over again. You could sell another cash secured put. So it's a little bit different than what I've done in the past. I have done the wheel quite a bit, but a lot of times I've broken the wheel. I start trading covered calls up higher on certain names, and a lot of times it comes back to bite me in the sense that the stock will go up short term, but then it'll drop. And then, I'll be stuck in a potentially not profitable covered call. So, and then you have to be steady with your trades. You almost want to wait and not manage them too much, meaning I like to trade the positions once a month. I prefer trading monthlies. So the third Friday of every month, I prefer, to use those expirations than the weeklies, especially for these smaller names that don't have the huge amount of expirations and the huge amount of volume and open interest. So I find it a little bit easier to do monthlies. Now that doesn't mean that I don't necessarily make a trade early if the premium is outrageous. I did that with FCX recently that you'll see at the end of this video. I went ahead and rolled those covered calls again and brought in quite a bit more premium for last month. So rinsing and repeating and doing it every month, that's where the consistent, steady income. So like on a small account, you can, if you're bringing in $1,000 a month on a $25,000 account, you're getting some fantastic returns compared to what you could make in most other cases, especially much better than a money market account. And in a lot of cases, much better than just having stocks. So, and then one thing I do a little bit different, and I'm doing this with all my trades, I'm telling people to look at the long puts and long calls. And if they're dirt cheap, which I find, especially in inexpensive stocks, they can be dirt cheap, well, go ahead and buy them, but still look at it like you're doing a cash secured put, even though it's a vertical put credit spread. Or even on the call side, look at buying those long calls because, again, they might be really cheap. And if they're dirt cheap, like $1, $2, $3, $4, why not buy two? It's just something I've been playing with recently, and I've started doing that, and I think it will help with covered calls on momentum plays. When a stock shoots up, it doubles within 6 months or triples or quadruples. If you bought that long call, then all you would miss out on the upside would just be the spread minus whatever premium you brought in. And if you purchase two, then it could actually, you could end up doing better. You might have an even smaller loss or no loss at all. I haven't done the numbers on that yet, but something to consider. So what I do is when I'm putting the trade up, I usually will just add that extra leg, and then I'll just go out $10, and I'll look to see what does that cost me. I'll look at the the $10 spread. So if it's a $20 strike, then I'll look at the 10 long put, and then I'll look at the the 11, the 12, the 13. And a lot of times I'll end up doing a 6, 7, 8, 9 wide spread versus a 10, because I'll find one that's a little bit, better price than doing the full 10. And then I also look at what the price is, and I'll adjust it accordingly. Now, I haven't bought like two, like I mentioned a minute ago, but I hope to try that the next time I set up a new inexpensive position. I know it happened with Mara. I think I bought some long puts in Mara for like $2 or $3, and I should have bought two at that point. But I'll probably get another chance to do it. So just wanted to share that. Next, we'll jump into the 25,000 balanced wheel trades that I've done. I'll go through those fairly rapidly because I've done these videos before. So I'll primarily talk about the notes and what I've learned from it, and I'll just briefly touch on the trade. So stay tuned. I think it's going to be very interesting. Okay, I've opened up my options wheel spreadsheet and to the tab for my monthly balanced wheel strategy. So this is a hypothetical, like if you had a $25,000 account, what the trades could look like. But these are real trades. These are trades that I've made. The account that I've made most of these in are my Roth account. I do have a few I think I've made in my IRA, but it gives you an idea of what you could do. Now, I've had some subscribers say that, oh, I shouldn't do this because it's not genuine, but I have members following it and have been doing quite well with it. So it's something that they like, that I've provided for, going on almost 10 months. So have not had any complaints about it. If you do have an issue with it, let me know. Just add a comment. Now, I started back in October, I started with Chewy, Square, Twillo, and had a really good month trading those particular stocks. I did get assigned Pinterest, but I made, not including the assignment, right around $1,500. So I started with a bang. The next month, because Twillo and Square shot up, I still did pins, but I switched it to a covered call. Since I own them, that should be a covered call, so that's a mistake. Let me do covered call. And then I went in and started using HIMS. At the time, HIMS was $20. It's had really good open interest and premium, and it's worked out pretty well. So it expired, made some good premium the next month. I believe, what did I make? Close to 911. And then similar for December, also did HIMS again, rolled it. Pretty much rolled everything to the next month. FCX also rolled it. And then Bluebird, I started with Bluebird the previous month. I still am rolling Bluebird every month. And then Occidental Petroleum, I did it just in December, and it worked out pretty well for those 4 trades, 1243. So, and then in January, I did not do Occidental Petroleum. I decided against it. I did pins, of course, because I own 100 shares. I did HIMS again, and then Bluebird. HIMS had gone up, so you can see here I'd gone up a little bit on the price. Bluebird, again, just rolled it at 40. It was very profitable. If you're not familiar with Bluebird, it's the yellow busing company. I like them. They're very profitable. FCX is another one that I like, so I started trading it. I guess back in December, and rolled it for several months before it also got assigned to me. Great company. It's one I probably do want to own. So I'm again struggling with letting it get called away. But the next, I may do it as a different trade in a different account because I really like them. They have really good numbers for next year. So for this month, I did 935. So another good month in February. I decided to do PayPal, Bluebird, again, FCX, and Pins. Pins got called back to me, or it called away from me. So I ended up replacing the cash up here. I believe, 3,095, but when it was called away, I brought in 3,400. I think I made like 600 in pins, and I might look at making another trade with pins. It's not that far from where it was at this time. I think it's like 36 or $38 currently. FCX, another roll that I closed this month. I didn't make as much premium. We started kind of having a rough month at that point. I did have PayPal get assigned to me. So that was one of my lowest months, 489. So you don't necessarily have the same every month. It's a little bit, but on average, it comes out pretty close to $1,000. April was again a fairly rough month, so I did only $384, and I did some rolling just to kind of initially to buy myself more time with FCX, but it still got assigned to me, which again has worked out well. I believe it's like 45 currently. So it being assigned to me has been pretty profitable. So I switched and started selling covered calls again, just rolled Bluebird. Here we are in May, and I had a really good May. I brought in 691, so a little bit less than some of the other months. But I was writing some covered calls, and then I was also still doing the cash secured put on Bluebird, SoFi. I started trading with SoFi at the time. I did a 13.9 for the vertical put credit spread. SoFi has also jumped big time recently. I think it's a little bit overpriced currently, but that month went well. And in June was a really good month. I rolled FCX twice. So I brought in a lot of cash with FCX, and it currently has a expiration May 15th. So I might roll it. I'll probably roll it again this month without a doubt. I mean, trying to roll everything or deal with everything one time each month. Bluebird, another roll. I did have to go farther out. They didn't have expirations, and I don't believe they had a September expiration. So that was something that was a little bit unusual. So I'll probably have to roll it to either December or November. I have to see what other expirations they have, or let it sit until I get a little bit closer to October. And then SoFi, I had a good trade with them, but then recently I've closed them. I believe early July I closed them. So did quite well. And then FCX, another trade. So for these, I did over 1,081. Over here on the left, this is just cash that's generated. So overall 73.55. Interest was 978. So a total of 83.34 in this account. So again, it was for 9 months. If you just do what's the return currently, what's the 8,334 divided by the 25,000. So that's like a 33% return. And I still have 3 more months. And I've seen this with some of the members who are also trading these, as well as some other stocks, have been able to get really good returns. Yearly income, 11,112. So that's if it's adjusted for the full year. And then total capital, 31,870. So if I looked at it using total capital, it's almost like a yearly ROI of 35%, monthly of 291. And then it's like if you did the rule of 72, you could potentially double your account every 2 to 3 years. Pretty substantial. Now, this is just showing total cash that I have, cash for puts, available cash so I could do another trade, stock value, FCX, and PayPal. And then total value is 31,870. So, and this would be right now at this point in time, or at the very beginning of July. So it'd be like a 27% return or total ROI of 37%. So again, in this account, it's works really well, but just doing the same trades and, one trade a month. So you're talking only 4 or 5 trades every month for someone who's still working full time. That's not very difficult to do. It's like 1 trade a week. Or potentially what I find is I end up doing the trades pretty much maybe within the same week. So it doesn't require a lot of time. So you could really increase or double your account fairly quickly. And if you need the income, just you add in a couple more trades on a monthly basis, and suddenly you're getting some crazy returns. And like I said before, I've seen that with some of my members. I'm not embarrassed to say some members are doing better than I am. They're taking a bit more risk, and they're trading a lot more. I'm not on the markets as much because, again, I'm still working and I'm building the barn dominium. So here are some notes: cash secured puts and cheap long puts on good companies that are not overpriced. Again, what I talked about before, these are real numbers. I could do one more trade, but I have had a tough time finding a good candidate. So again, to me, it's finding good candidates. Some people aren't as particular as I am. I won't touch a company that's not making money. 2 of the 4 stocks assigned, waiting on PayPal to recover some before doing a recovery call. So PayPal did. It's jumped all over the place. Pens was also signed and then later signed away and was fairly profitable. I also had to wait to do a covered call, pick different companies due to some stocks becoming very pricey. HIMS is an example. Twillo is shot through the roof. This shows things change and you cannot necessarily rinse and repeat, but with a company like Bluebird, I've been able to rinse and repeat, and some of the others like FCX. Most of the returns I got with the planner did not beat this. So I had a financial planner years ago, and I got nothing like this kind of return. I was lucky to get between 4 and 8%. Some stocks have been in the money for a long time. Like I wanted Bluebird to get assigned away from me or to me, and it just doesn't seem to happen. I buy more than one long put or call, and I talked about that at the beginning of the video. Just look, add another leg when you're trying to make the trade and just see what the price is of buying that long put. A $10 stock becomes a $20 stock. A $20 stock becomes a $40 stock. So even though you're looking $10 out, at some point, that might be minuscule. Buy more than one long put. That's what I was talking about. Close trades sooner for better ROI. That's something I definitely could do better, and I'm trying to do better. So there are times when I've not noticed that some of these are very, very profitable, and I fail to close them because I could close it and then do another trade and potentially do better. So, and that's a negative of, if you're working and you don't have time to look as much. Closed SoFi recently. Again, I believe SoFi got too pricey. I think at $20, it's too pricey. I think the current PE is over 100, and I think forward-looking PE is over 70. So that's what I wanted to share with you guys. I'm not going to go into the other ones. I share this spreadsheet and the video with my membership. And again, I have a lot of members trading this. Let me know what you think. Do you have some other stocks or ETFs? I've been trying to find an ETF to do this with, but let me know if you know of another stock or ETF that might work well with this. And as always, thanks for taking the time to watch the video, and I hope you have a wonderful day.